and that's my analysis for gold tomorrow. Let's move on to the financial sector. I've been finding it fairly interesting lately. I used to trade it a few months ago, and I've taken a step back just because I've seen that price has, been moving sideways in a very tight channel, and I couldn't really identify any serious patterns that I would be interested in. I started to think for a long time that this is a head and shoulders, and it very well might be. I don't want to make the assumption that it's not, but from this we can see that I have an Elliott wave here. I've got our 1, 2, 3, 4, 5. This is our high point, $50. And an interesting thing to note over here is if you leave out this 2, 3, 4 and you just look at this point right here in comparison to this picture right here, they're fairly similar in a lot of ways. And I'm a big guy at looking at fractals, and I think that my favorite quote about the markets is that the market never repeats itself, but it rhymes. And so I'm always looking for these kind of similar patterns to show up, whether it's on the hour chart or the daily chart. I just showed one in GDX. But so I guess from this, what we can see is that we have this impulse here, and we kind of dip down for a second. We flag out right here. We set our high. I bet a lot of people are thinking that this is the head right here. We come down and make 3 rounded bottoms here, that are all fairly equal in their support lines. And over here on the current picture, we see a very similar thing. We have our impulse wave. I would say that this would be our dip right here. I would say that this would be our head, and then we have 3 rounded bottoms, all of similar length, or all of similar bottoms. Here on the hour chart, I have this mini divergence that we have right here. I see the stochastic moving up, 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 while price moves down, 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 and then we actually, set our low right here, and this low comes in with a CCI of 375, which is extreme, and then the bulls kind of take back this level right here. We see 2 green CCI bars. I'll go ahead and pull this back down because I like to see my RSI in the chart. All right, so that's on the hour time frame. What do I have for the 30-minute? So I don't have any indication that this is not a head and shoulders. It certainly could be, like I said earlier. There's just some reason to believe that it's not, and I'd like to try and present both sides. Again, the head and shoulders argument is fairly clear. This is the left shoulder, this is the head, and this is the right shoulder. The possible continuation theory would state that, there are 3 parts to this left shoulder. We've got this right here, marking our low. We come up, set what might be a head and shoulders right here. This is another low, and we have a big run up. We drop. You see, it's just similar patterns right here. So that there are 3 parts to this right here that I'm seeing as well. And we come up, we set this. We have our possible head right here. We drop down, and then what's very similar to me is this big impulse wave, this big drop. That's not a lower low dip, and then we run up. So from this, let's go into the 15-minute chart. Actually, let's go back to the 30-minute chart. I have some divergences here that are of interest, I guess. So here we have our CCI moving lower, which would be our first divergence, which would set us off that this is an unsustainable uptrend, and it comes true as we have this big fall downwards. However, once the CCI gets way down here, we have a run up, and we see that our CCI down here is not the same level as it is up here. However, price is making a flat pattern right here. And lastly, I guess I see this mini divergence right here from this point to this point, and our stochastic is moving downwards, similar to like it did over here on this side, and that gives me reason to believe that price is going to fall. However, if we maintain our thesis from the other side, that this is a reciprocal of itself, what happened on the other side? Well, on the other side, we had this big impulse wave up, we dropped back down, we ran up again, made pretty similar highs, and then we fell back down again. So you could make the case that falling would reciprocal of itself, and therefore we might move higher because this is the next price action that we had after we set this lower low. All right, so I guess here on the daily, I zoomed out to the daily right here because I think that this triple bottom here is very interesting, as well as some daily divergences, which are multitudes times more powerful than anything on the hour time frame. First one we've got a low followed by a higher low, while price makes a low followed by a lower low. First divergence. Second divergence is that this makes a higher wave and this makes a lower wave. So this one right here is a current divergence. For example, this divergence down here would be put on the back burner to this one just because it is closer in time to us. However, what I'm really interested in is the possibility of this being a triple bottom pattern. So the notes I have for a triple bottom are volume trends downwards 67% of the time. What do we see in volume here? We see that volume is heading on lower, downward price leading into the pattern. We see that we have downward price leading into the pattern, but it should not drop below the prior bottom. I would say that this is the prior bottom. Breakout target is where the breakdown began. This would be where the breakdown began, and I marked this out by these orange lines right here. Look for a tall left side with few to no price consolidations. I wouldn't say that there's no price consolidations. You could say that this is a consolidation, but we do have few to no consolidations on our way down to our triple bottom potential pattern. Better performance if triple bottom occurs during a large flat base. This is a large flat base. If I have ever seen one, we've been stuck in this pattern since the beginning of 2017. Triple bottoms can appear as the corrective phase from a measured move up. And if this is the case, the breakout may be less than expected, which would make sense if this is a triple bottom coming out of a previous high. We're going to find a lot of resistance at that previous high. So what it means by a measured move up is this is a flag or a measured move. It's basically flat right here. Price just stalls and let the technicals cool off, and then we move up higher. So I guess that, it is the corrective phase from a measured move up. If less than 3 months decline into the pattern, it works best. Right here, it looks like we have a 1.5 month long decline into the pattern, so we would check this off our list. If the triple bottom appears after a peak, the breakout move is likely to stall at the peak, which would go along with our previous understanding, and better performance if the last valley bottom is above the second valley bottom. Right now, I would say that these are equal valley bottoms right here, and so that one would not hold true. However, every single other pattern description is legitimate. Another thing of interest is to note that our RSI is stayed above 50 on the daily time frame fairly well. We do have these bullish divergences, and I've marked some fib lines right here that mark as resistance for us to get to. We have our initial drawing. I drew the fib from this low. Here, let's just go ahead and do it. So I drew it from this low up to, what did I say? This is our 100. And it looks like I might be just off a little bit here, but the 127 falls right there, the 141 right there, and the 161 all the way up there. Let's get rid of that just so you can see what these lines are marking. I had this green line right here as a potential breakout price. And let's move into the 5 minute. On the 5 minute, we have a ascending wedge, and this is very interesting. I had us coming down to the 50% retracement level, which I very well might take a position in if this drops to 43.50 levels. But as far as the ascending wedge goes, you can see it's pretty clear, and it's even, we have a little head and shoulders right here. We barely get below it. We come up higher. This high point, or this reversal point, would probably be where these two lines touch, which would be our apex. We would draw this down, marking our low. Then we come up even higher, which is actually, according to theory, that we come and touch the apex before falling back down, and that's our final exit point. And we do see that we are starting to waterfall quite a bit here. So my psychology when I'm watching this price action tomorrow is that at the 78.6, I'll be interested. Once it breaks down, I'll take half position at $44, and around the 43.70, 43.50 range, I'll take a full position. And if we fall all the way down to 43, I'll double down. And if we move much lower than that, then I'll take my loss. But as far as all of our other analysis goes, I think that we've built up a firm case for a semi-firm case for a potential 10% move up higher, as opposed to a potential 2 to 3% loss, and therefore 3-to-1 risk-reward ratio would say that it's worth the risk. So let's go into the 1 minute, and I don't have anything for that. All right, so this has been my analysis of the financial sector, 3 times bull shares, FAS. Let's move on to XBI.